Respected CEO Sir, IIBF, Director Training, Mr. LVR Prasad, our PDC has Dr. N.K. Bhasin, Mr. S.K. Gupta, esteemed faculty, Mr. Anand Mohan, Mr. Arun Mishra, Mr. A.K. Chatterjee, Mr. John, Dr. Thiruma Vallavan, and our dear participants. Good morning, everyone. It is our great privilege that we have been joined, or our invitation has been accepted by Shri Pallavmohapatra, Chief Executive Officer and Managing Director, ARCIL, who will be interacting with us. He'll be sharing his views on a very relevant topic today for the banking industry. So before we start, I will just give a brief introduction of our guest speaker, Shri Pallavmohapatra. Sir brings nearly 4 decades of result-driven experience in diverse roles throughout his career. In his prior post as Managing Director and Chief Executive Officer of Central Bank of India, he played an instrumental role in turning around the fortunes of the bank by addressing its stress asset portfolio in particular, along with key modernization initiatives. He was also Deputy Managing Director, Stressed Assets Management Group, State Bank of India. Sir has earned a proven record through exemplary leadership in a variety of roles and assignments at the corporate office and field units of State Bank of India. His key assignments at SBI include VP Credit and Forex, SBI California, Los Angeles, US, Managing Director, SBI Custodial Services Private Limited, Chief Executive Officer, SBI Cards and Payment Services Limited, Chief General Manager, New Delhi, one of the largest circles of the bank. During his career, he led a plethora of modernization initiatives based on data analytics to improve process efficiency and mitigate risk within the organization systems. Stewardship, there has been a strong focus on the growth and empowerment of the organization's workforce through meritocratic policy practices and wide adoption of technology solution. As a seasoned banking stalwart, he is accomplished in navigating the stress asset space to build productive partnerships. Sir, we welcome to the program. Sir, a brief profile about our advanced management program in banking and finance. So this is our 13th program batch which we are running, and we have a collaboration with IIM Calcutta wherein people go to the campus and they are there is IIM faculty, in-house faculty, and people stay there for 5 days covering mostly main aspects of the management. They cover about the economics, macroeconomics, organizational behavior, and strategic development. And so this program is of 275 hours module-based program, and there are 19 modules which are covered over 2 semesters. And this is a case study-based approach. We try to bring in most of the modules. There is a project work which is done by the people along with assignments, exams, and presentations. And we take our own faculty, and we have also some ties with good industry experts who help us in taking the program forward. With this, I would request our CEO to please give a welcome address.
Thank you, Ravita. Sir, welcome. The purpose of this AMP over a period of 12 years plus is to create a pipeline of leaders for the banking and finance industry. One of the integral part is the leadership speak series, where we invite various MDs, important leaders of the BFSI sector. So thank you for accepting our invitation for being part of the program where you wanted, and we wanted you to interact with the people who will go to their organizations and develop as a leader. And mostly you want them to be a change leader. And how do they transform organizations in a different way? So in the process, the Leader Speak series also gives them an opportunity to interact with leaders. And I thank you for accepting this for the benefit of the participants. You have a leader with you, Mr. Mohapatra, who has varied experience in the varied field. In State Bank, he was instrumental in developing 2 crucial organizations, SBI Global Factor, where he started this, and the turnaround of SBI Card. How the business can be transformed, that we will also hear from them, and how it can be done in a more ethical way, which will give a long-term benefit instead of a short-term gain. That is one aspect. Then at different phases, how do you transform yourself from credit card to head of a daily circle in retail, then to the DMD Sambi, stress asset management? How do you change yourself according to the opportunities given or the positions given? How do you integrate yourself? By learning, by interacting with people, how do you transform? That the transformational leadership is one which I think you don't have a better person than Mr. Mohapatra here to interact with. And how do you manage as the MD of a bank, the stakeholders, the government, customers, the staff, when at the difficult position when most of the PSUs, including central bank, was under PSA. So the long-term strategy which will benefit the organization is key to the success of not only the organization but also for the individuals concerned. So I am very happy that today we are having Mr. Mohapatra who will interact with you on all these subjects, the changing dynamics of financial sector here, and how do we prepare ourselves to be the future ready in the financial sector. Sir, welcome, and I hope, sir, this will be quite interactive.
Mr. Das, and thank you, Ravita ma'am. At the outset, Mr. Ketan, I want to congratulate you on being inducted in the planning board of IGNOU. That's a very coveted assignment which you have got, and if I remember correctly, this is for 3 years, right?
3 years.
Okay, good. So not only you should be happy, but I think IIBF should be also should feel proud that their CEO has been inducted in that. So, Mr. Das, see, what I thought is that I will cover one particular topic, which is very contextual as well as contemporary, and the entire financial world was grappling with it. Now they feel that the problem is over, but I have an opinion which is different from that, which is state growth and what were the lessons learned from that. But I will briefly respond to that in the diversified assignments, which I did in State Bank of India and then moved to Central Bank of India and after retirement in asset reconstruction company. I don't have any mantra, but only one guidance I can give. That guidance is very short. That guidance is only one sentence, 5 words. That is, unlearn whatever you learned in your previous assignment, leave the baggage, and learn the new thing. So this is the mantra I want to give to my banking colleagues, because sometimes what happens is that if they move from one type of assignment to another assignment, they normally carry the baggage with them, and they try to fit that particular experience into the new assignment. Then the risk of basically not being able to tackle the new assignment goes up. So this is the only mantra, not mantra, guidance from your senior or the elder brother. You can, whether you accept or not, but you will experience, because you people have a long way to go. There will be a lot of challenges. There will be a lot of resistance. You will find that if you want to basically undertake some transformation exercise, the external resistance will be not that intense, but the internal resistance will be very high. And when I am talking about the internal resistance, and if you are at the topmost position, even the resistance from the board will be also there. So these are the learnings. Of course, I will not basically go into these learnings. So to come back to what I wanted to talk to you in today's interaction, that is the credit growth during the last 2 decades and how it evolved and how it evolved and what lessons we have learned from that. When I'm talking about 2 decades, the first half of the first decade which is say from 2000 to pre-Lehman Brothers crisis. In that particular phase, major part of that particular phase, I was in SBI California in Los Angeles. SBI California is a subsidiary of SBI. So, and this is the FDIC, Federal Deposit Insurance Corporation of the USA, is the regulator for these state chartered banks. I saw and I was seeing that some bubble is basically on the way. There, when I joined SBI California, so I was basically in the Forex and the trade. So mostly I was doing the underwriting, and there the underwriting of the bank was mostly in real estate, and real estate means the motel industry. What I saw was that, and also residential units. What I saw was that when the Fed rate was coming down, lending rate was coming down, the lending activity in USA started picking up. With the competition growing, everyone wanted to have a larger pie, larger portion in the pie. And in that process, the dilution started building up. The first dilution was when I joined, the loan to value ratio was normally on average around 60-65%. But when I left, can you believe that the loan to value was 130%? That means not only financing the entire asset without the stake of the borrower in the game, but also giving more than that. And when these type of things happen, and the competition becomes intense, even there is a dilution in the selection of the borrower. Gradually, these lenders move towards subprime lending. Subprime lending, LTV 130%, rate of interest low. So this was basically the lull before the storm. And it was, I will say that no one could have avoided that type of crisis. Now, what happens? In this financial ecosystem, there are different players, banks, like in India, NBFCs. There is one entity which is called basically the fund. Now, the outlook of the fund is how to make the return and exit that particular venture. So here, the funds played the same role. What they did was they created a model where good loans and bad loans, they got the rating from the rating agencies and sold that package to many pension funds and other entities. These entities were not able to see through what type of loans are there, what type of assets are there in the bundle. And then at one point of time, it exploded. Now just think of when the Lehman Brothers crisis took place, or it is called as also the global meltdown, the US lending market and also some of the Europe's lending market. So there was basically a sort of a credit squeeze in these markets. When this happens, so normally it moves to other geographies. So it moved to India. India banking system especially was flush with funds because funds were also coming from these developed countries, especially the USA. Now, when the banks are inundated with these funds or the deposits, what they will do with the liquidity? There is a limit up to which they can invest in the government securities, ARCIL securities. So they started entering into the loan market in a big way. Because I have analyzed these assets when I was BMD Stress Asset Resolution Group. What happened was that the lending or the loans were given by the banks without looking into whether the assets are being created or not, number one. Number two, loans were basically given to the activities where the promoters didn't have the stake or the skin in the game. The skin in the game is a very, very important aspect, which the entire lending industry forgot at that point of time. I will give you one example, road assets. Because in 2016, AQR, 3-4 types of, I would say, the sectors where the lending was done, that faced a lot of problems. One is the road sector, the second is the power sector, the third is the normal infrastructure sector, and the fourth was the steel sector. Steel, fine, it was mainly on account of the external factors, where the import from some countries were at a very, very cheap rate. So Indian manufacturers were not able to compete with them. I'm not talking about the overcapacity created during that particular period, but this external factor was one of the very, very critical and important cause which put this steel sector into distress. Now, in case of the road sector, especially I have seen a lot of these road assets in Andhra at that time, undivided Andhra, where the holding, so what happens is NHAI says that we will give you the project, road project, any particular project, to only one particular company. So these road developers, what they were doing is one holding company, and they used to create the SPV, special purpose vehicle, as a company. And each vehicle they used to bid for those projects. Now, the holding company is supposed to basically provide the capital to their SPVs. And if there is any shortfall, that shortfall is met from the bank borrowing. But what happened? Because of the competition among the banks to grab the larger share of the pie, banks started funding the holding company. They also funded the SPVs. So think of, there was no skin in the game of the borrower. And there is no skin in the game of the borrower. You forget about the integrity issue, but in the normal circumstance also, if the project fails, the promoter has nothing to lose. So the only loss will be to the banks. Similar type of things happened in the power projects. In the power project, at that time, thermal power, this renewable was not gaining that type of attention. In case of the thermal power, I can cite one example, life example, which came across to me. I was CGM Delhi. There was one company which wanted to set up a thermal power plant in Madhya Pradesh. They came, and their registered office was in Delhi, so they wanted to take the loan from SBI. So the draft project report prepared by a well-known, I will say, the investment banker, they gave that project report to me. I said that before going through the project report, I just want to know whether you have the power purchase agreement from the DISCOM in Bhopal. They said, no, sir, we don't have. I said, whether you have fuel purchase agreement. He says, no, sir, we don't have. I said that if you don't have a PPA, then what is the cash flow I am going to see? What he said was, the state government is saying, first to set up the project, then we will sign the PPA. So just think of, and such loans were also sanctioned and disbursed at that point of time. So PPA was not signed, project was set up, investment of the bank went into setting up those projects, and there was no cash generation because there was no PPA. Same thing on the the input side also, though there was a PPA, but FPA was not there. These things plus the third thing what happened was, I'm talking about now the wholesale lending. I will touch base upon the retail, agriculture, and MSME also. Now, in this process, what happened was the NPA started building up in the wholesale. But many banks were not basically showing these as stress asset, mainly through evergreening. RBI at that point of time realized that something wrong is happening in this particular system. So they basically they did the AQR, which is asset quality review. And when they did the asset quality review, there was a steep jump in the NPA in the wholesale lending. Now, when there was a steep jump, the banks normally behave in a very, very reactive manner. So the banks stopped lending to the corporate world. And also the corporate world, those who were very sensible corporates, they also started deleveraging. So the demand as well as the supply to the corporate lending came down. Now there was liquidity with the bank. What the banks will do with that? So they started moving towards retail. Agriculture was, of course, mandatory because they had to achieve 18% of their total loan as agriculture advance, and MSME to a certain extent from the priority sector lending point of view. Now, if everyone is basically moving, everyone means every bank is basically moving towards the same segment, so there will be stiff competition. Now, many of you are bankers and some of you are regulators also. I can tell you that all banks, during their quarterly result interaction with the analyst or the press, the first thing they used to basically tell the press or the analyst is, how my RAM percentage has moved from this percentage to that percentage. And analysts also, without going deep into that, they will basically look into it. This is a positive move. Now, in the retail, just think of the corporate is not growing because they were deleveraging and the supply side was also squeezed. How many of the borrowers are basically salaried people from the government sector? It's limited. Now, majority of them will be either employed in the private sector, or they will be or they will be self-employed or running their own businesses, right? When the corporate is not growing, so the cash generation in the corporate is also not growing. If the cash generation in the corporate is not growing, either there will be layoff, retrenchment, or the salary will not be basically going up. These are the three things. In case of the corporate lending, the cash flow was from their activity. In case of retail lending, the cash flow is nothing but the salary earned by these individuals. This particular segment was further hit during the COVID period. So the cash flow of these people further got restricted, limited, reduced. So my dear friends, the next round of stress which we may see will be in the retail and also the MSME. Why in case of the retail, I gave you one reason. There may be multiple reasons. The other multiple reasons can be that if because of this type of competition and everyone basically moving towards that, one borrower may be getting more than one retail loan. Whether he has got the repaying capacity or not, no one is as of now looking at that. There is dilution in the loan to value ratio. There is dilution in the rating of these borrowers. So all these things compounded together will have the impact on the quality of this particular portfolio. In case of MSME, what happened was, see, MSMEs normally do not have that much of resilience to absorb any shocks which happen in the external environment. The shocks took place during the COVID time, and government rightly, and also the Reserve Bank of India rightly came out with some concession to them. Reserve Bank of India gave them the moratorium. There was 2 instances of moratorium of 6 months each, but it was moratorium. It was not waiver, right? Now, on this part of the moratorium, what happens is the MSMEs will not pay for 6 months plus 6 months, 12 months. Not paying that will not result into the loan assets slipping into NPA, right? But just think of this 6 months plus 6 months non-payment, but after after 1 year, they have to start making the payment. And even if there is a restructuring of the loan, so they have to take the load of this 1 year period of repayment also. Whether their cash flow has improved to that extent, and their debt service coverage ratio remains at a comfortable level with a higher payment obligation. So this is one reason. The second reason, which I feel as per my assessment, is the emergency credit line guarantee scheme, which was definitely needed at that point of time because they were short of liquidity, which was given to them. I think that was 20% of in case of SMA 0 and standard asset, 20% of their existing limit. Now, this 20% is additional leverage. Now, if they are taking this additional leverage, whether their cash flow is also increasing by 20% so that they are able to service their debt. So these 2 segments, I feel that they may be stress in coming time. First, there may be stress in the MSME. This may be followed by stress in the retail. And in the retail also, what happened even after the COVID, there was competition among the banks to give unsecured loans. Whether it was a business loan or personal loan or credit card loan, you might have read in the newspaper that the credit card dues are really increasing in multiples. I have worked in the credit card company. It is for sure that if any credit card holder pays the minimum amount due, then he can never pay his total dues during his lifetime. So these are the things there. The lessons to us are that during the good time, we should not basically forget the lessons which we faced during the bad times. Second is the basic principles of credit should not be compromised at any cost. The third is the skin in the game of the borrower should always be maintained. Otherwise, even if his integrity is not doubtful, he may lose the interest in that particular enterprise if things are not going as per his expectations. So now people say that the NPA level in the banking industry has come down to rock bottom, right? But my dear friends, what I feel, these are cycles. So the cycle of the corporate stress is at the lowest ebb, but with the liquidity availability with the banks, though there was for a very short period, there was a liquidity crunch in the banking industry, but now this liquidity crunch to a great extent has been eased out. So the banks will again go back for lending, and banks have to lend, otherwise the GDP growth or the economic growth.
Okay, sir, thank you. Because people should know what is coming in future. What is hunky-dory may not be the actual picture. That is what you told clearly. Let us see how these future leaders react to this. Let us see, sir.
We'll take a few questions, sir, with your permission.
Sure.
So, any questions?
Yes, ma'am.
Yeah.
Ma'am, I'm Dr. Deepak Kumar. Sir, thank you very much for sharing insight on the banking sector, sir. Sir, as we can see that the CD ratio of the banking sector has already reached to 80%, sir. And banks in India are mostly dependent upon their for their liability on the deposit only, sir. We do not have the much effective tools for our liability sourcing. So, and the corporates, however, corporates are not taking the loan from the banks, but the retails and the MSME sector is growing a lot. And the government has also told that now the banks has to see some other way of lending to the MSME. They should not be lend to the asset-based lending only. So in this situation, sir, what you will suggest, sir? What you say that where from we can source our liability, sir? Is there any other tools available in India, sir?
See, in India, if you look at the liability side for the banks, the liability side basically, as you rightly said, constitutes the deposit, right? If I am not mistaken, then around 90 to 95% of the liability is from the deposit, and remaining from raising the funds through debts, which are either medium-term notes or which are NCDs or which are so. But this side, which is basically the capital market side, has not become very popular in the banking sector. So they are depending more on the deposit. Now, what's happening in the deposit is, rightly or wrongly, I cannot make any comment on that. Today's generation, there are two things why the deposits are not picking up. Today's generation, they want good returns, right? And these good returns, this generation is gradually moving towards the mentality of a fund house. That means they are looking at what is with this money, what will be my IRR, right? So they are moving towards the capital market, especially the equity, not the debt side, without realizing that whether they have that information which normally the institutional investors have for making these investments. You must have seen that at some point of time the Sensex will go up, and after some time it will come down. And in the news you will always find that the foreign institutional investors have basically offloaded their investment by booking the profit and went back. Then who is buying? Someone must be buying, right? And mostly the retailers are buying. So this is one part. The second part is basically in the deposits, the policy rate was not coming down, right? The banks kept their interest rate higher, but they didn't increase the deposit rate because they wanted to have a higher NIM. What I strongly believe is if the banks feel that they can afford to continue with a NIM of 4%, 5%, either they are entering into a high risk zone or they are not passing on the benefit to the depositors. If the second is happening, definitely there will be a liquidity crunch. The banking sector has to move out of this particular mentality. I hope I was able to respond to your question.
Yes, sir. Thank you very much, sir. Sir, but the NIM, average NIM is approximately 3% only, sir. So
no, the average NIM is 3%. But if you basically talk to some of these private sector banks or the NBFCs, they will always aspire for having a NIM of 4.5%. Even some of the private sector banks in their quarterly results, they say that we have been able to maintain our NIM at 4.5%, and the analysts give very high marks for that to them. But whether it is sustainable, no one is looking into that.
Sir. Thank you, sir. Thank you very much, sir. Thank you.
Thank you, sir. Sir, one question has come on the chat. Ms. Chitra has asked the question. So she is saying that presently all are talking about MSME funding as the government has given highlights during the budget. Even international news is affecting or highlighting the industry. Because of this, also industry concentration is happening. So, sir, she has asked your views on this.
See, whether it is MSME lending or it is other than the agriculture sector, whether retail, MSME or the corporate, if the focus is on the asset, on the collateral security, if the focus is on the collateral security, then most probably the approach will end up in some problem. Because I'm not looking at the activity, I'm not looking at the business, I'm looking at the security which I have. So that means my approach is that I will recover my loan from sale of asset. Whereas it should be basically the recovery of the loan from the cash flow. Same, that's why Government of India and especially Honorable Finance Minister, she has said, we should basically look at financing the MSMEs from a totally different angle. And I'm not bragging about it. When I was CGM in Delhi, at that time also, I used to focus mainly on the cash flow rather than on the collateral. Though at that time, up to 2 crore loan was collateral free, but even for more than 2 crore, if I see that the viability is there, the potential for generation of cash is good enough, even if the security available is low, I can go with that. Because whether you have a security or you don't have a security, if there is a failure, sale of asset is not that easy. In the ARC sector, we are seeing that the reserve price for the auction keeps on coming down, except for some residential real estate. Otherwise, commercial real estate, you forget about it. Industrial estate, real estate, you forget about it. Many people don't realize that if government or the state government is a lesser in a leasehold property, they think that this is a 90 years old lease. So what's the problem? My loan is only 10 years, 15 years. But the problem is, if there is no NOC given by the lessor, your mortgage is invalid. Many cases are coming on that. If the government takes a decision at some point of time, or there in fine prints in the lease agreement, there is a clause that the government can change the requirement of the lease, then the mortgagee may have to face some problem. So the answer to that particular question is concentration is of course any type of concentration builds up the risk. That is basically the theory. But if the lending is done based on cash flow basis and basically based on the analytics, by doing this scrubbing of the credit ratings, and also now there are aggregators. So on a daily basis, this information is available that how much sales or the revenue generation is of that particular entity. So today there are so much of information available to the lender. Whether the lender, number one, if the lender thinks that they can do it manually, it is going to be a time-taking process. But if they build a system-based solution where through the analytics and the APIs which are open with these entities, they are like a payment aggregator, the legal entities. So a proper analysis can be done, and it can be done in a quicker manner.
Thank you, sir. Thanks. Sir.
Thank you, sir.
So one more question has come. I think Mr. G. Ganeshan has asked, there is also selling pressure on retail and MSME lending. What would be your suggestions to mitigate these issues to arrest further spread?
No, spread means spread on pricing or spread on what?
Mr. Ganeshan, can you please elaborate on this? What is the question exactly?
Yes, spread on stress, sir.
See, yeah. When you have the liquidity, sir, tell me one thing, what you will do with that liquidity? If you invest your entire liquidity in the government bonds, so your return will be lower, and it may end up in the return which is less than your cost, right? So as a banker, because you are a banker and it is not a NGO or charitable institution, you have to make profit because you have to give the return to your shareholder. Now, so you have to lend. Today, since the corporates demand of debt from the corporate is not that much, because those corporates which are good corporates, they are going to the capital market and raising the funds from there, right? They are not normally coming to the banks for a loan. So you are left with only basically two segments. One is agriculture. Anyhow, you have to do it, but two sectors which are left. One is the MSME, and the second is your retail. Now, in case of the MSME, this is my experience. Many of the MSMEs deserve loans, but the question is, like in Mudra loan, I can share with you my experience there. There are three types of loans in the Mudra. Now, what the banks were doing is they were preferring more of these loans in this issue segment, because CISU segment loans were falling in the power of the lower authorities, and Kishore segment loans or Tarun segment loans were falling in the power of higher authorities. They were pushing it back, pushing it down. So if the most of these loans are viable, even if suppose they do not understand how much of the debt is required, and based on some advisor's report, they apply for a higher one, then you can discuss with them that this is not your requirement. I remember that when I was CGM Delhi, I had gone to some program in a village near Jaipur. There was and Mudra scheme was started at that point of time. So that gentleman wanted to have a 10 lakh loan for setting up a car garage in the village. So I asked a very simple question that how many cars you expect in a month which will come to your garage for repairing, and how much of the revenue you will generate from it. So he didn't have any answer to that. So if proper assessment, and basically in case of the MSMEs, through the system, that means we should have an end-to-end loan management system, which will also do the analysis, and it will throw the result. That will be a better way of, because it will be standardized, it will have a quick turnaround time, and it will take the inputs from different external agencies. Was I able to answer to you, Mr. Ganesh?
Yes, sir. Yes, sir. Got it, sir.
Good morning, sir. I have one small question.
Yeah, go ahead.
Actually, I came across a report day before yesterday, which said that the delinquency rates on housing and credit card have also started to shoot up month on month. So we were already seeing this unsecured lending and other credit card portfolios rising like anything. So do you see a similar stress building up, I mean, on the country level or national level, which can impact the overall economy or create a big
the stress in the retail is building up, and being in the ARC, because we acquire stress assets from the banks and the NBFCs. As of now, the banks are not coming to. Hello. Banks have not come out with their notification for sale of retail assets to that extent, but NBFCs are selling. And the retail portfolio, especially the unsecured retail portfolio acquisition by the ARCs, is going up, which shows that the stress is building up there. So I gave you the reason. I'm not going into the integrity part, but other than the integrity part, where the intention of the borrower is right, but what they are facing and what there is a risk, what they will face in future, that also I have told you. That see, when there is a competition, a lot of dilution happens, and in this dilution, the borrower is not realizing that whether he is basically over borrowing vis-a-vis his repaying capacity. Especially the younger generation, they are going for it. See, when I was in SBI card, there were a lot of employees belonging to younger generation. And you won't believe the amount of money they used to spend. I'm talking about 2014 to 2016, the amount of money they used to spend on their credit card. And any new model has come, they will buy it. So they were basically doing it beyond their capacity. So that's why the stress is building up. So this happens in trade. So there will be cycles.
Sir, I have one question regarding the NPA part. Of course, the banking industry in India is at the lowest level right now, but we could see the implicit upside anytime soon. So, according to you, your bird eye view, what could be the reason for the NPA? It could be the credit policies or the non-crystallization of the assets which the bank is or the NBFC is having, or the over leverage of the companies when we are giving them a credit. I mean, any of the things.
Yeah, so I won't basically say that this is, you said that the assets have not been properly evaluated. I will not focus on that much. But the business has not been properly evaluated. That is the major factor. And when I say the business has not been assessed properly, there I am basically hitting at whether the requirement of the debt by the borrower has been assessed from his projected cash flow or not. Even in the ARC industry, in the ARC industry, there are two business verticals. One is the acquisition, where they acquire. The second is resolution, where they resolve, right? Normally, I have seen the same thing as it was seen in the banks. In the banks also, there is the underwriting vertical and there is the credit administration vertical, right?
Right.
So the acquisition team will go for inflated or very, very optimistic projected cash flow. And when it comes to the resolution, just the reverse happens. So the underwriting is a very, very crucial factor. And in the ARC industry, if we pay more, if the acquisition price is higher, the resolution amount will be lower. Same thing is in the underwriting of a normal loan. If you basically underwrite a loan higher than whatever is the requirement and whatever is the potential cash flow, the possibility of stress building up in that loan is very high. This mantra, whether it is a good time or it is a bad time, this mantra should not be lost sight.
Okay.
Sir, thank you for the wonderful session. Really, it was like eye-opening, and in very short span of time, you have actually shared your various experiences during your leadership tenure at various institutions, the national level. Sir, one simple question with the introduction of IBC, what impact do you see in this ARC industry, and do you really think that the roles are overlapping, or is it supplementing or complementing?
The roles of ARC and the IBC, or you are saying about?
Yeah.
No, ARC is also a type of a lender, right? When they acquire the asset from the banks or the NBFCs, they become the lender on record. So the role of ARC will be just like the role of any banks in the IBC process. But the IBC as I will say as a model is a very good model, and it created a lot of fear among the borrowers, because borrowers always thought that even if their loan becomes bad, still they will be in control of the business, right? And IBC totally changed that particular thing. The only issue with the IBC is the time taken for the resolution is too long. Even the resolution professionals, or resolution applicants who basically bid for the assets in the IBC process, at some point of time, they also start losing the interest because when it takes too much of time, because there is always a net present value of money or the time value of money. So if this time taken for the resolution is expedited, I think this process is a very, very effective process.
Sir, at least in IBC, we have a timeline for the resolution, but whereas in ARC, we don't have timeline.
But tell me, what is the timeline? 300 days and 330 days, right?
Yeah.
In IBC. What is the average time taken in IBC? As per the this IBBI website, is not less than 650 days.
Yes, sir, that 330 days, it has been clarified that it is the guideline days only, but it is not that it has to be resolved in that day only. So no, more than 600
Take
days.
the example of, you must have read this Lavasa, right? Now Lavasa, after maybe 3 years or 4 years, the process is going to be redone. So ARC, when you are talking about the ARC, it takes more time. So there are two things in ARC. One is ARC buys at 100% cash, the lender is totally out. Or the ARC basically buys at SR, where the lenders, a portion of their debt is in the form of the SR, then they remain till the resolution happens or the security receipts are redeemed, right? As per regulation, after 8 years, the ARC cannot have the SR in their trust book. They have to write off the SR. That means when they write off the SR, they take a hit on the books. So the approach in ARC will be always that they redeem the SR much before 8 years. Now, when I said that there is one more player in the financial services sector, that is the private equity fund, what they do, what basically accounting for procedure or the business model they bring it, when they run our ARC, is how to make my money and how to basically protect my capital and get out of it. That is creating more problem in the ARC industry. Where the banks, because if I basically put the management fee, I am taking the management fee from the first penny, which is from the recovery. And I keep on basically recovering that. And if suppose no further recovery takes place, I have recovered my capital, but I am not basically looking at the capital of the banks. So this model has to undergo a change. In various forums, I have been saying this. Various open panel discussion, I have been basically highlighting this because I have the experience of sitting on both the seats as a banker as well as a ARC MD.
Thank you, sir. I think that was
Thank
the
you,
last
sir.
question.
Thank you so much.
Thank you so much. Thanks. So that was the last question. There are many questions coming, but looking at the timings we have, so I think we won't take any more questions. I would now request our Director Training, Mr. Prasad, to please give a vote of thanks.
Yeah, but I think it's a wonderful session. All the participants would have gained immense insight into various aspects. Thank you, sir. Thank you,
Mr. Vishwaketan. See, I didn't prepare anything for that. It is basically from my experience.
Sir, experience.
Whatever I share.
Sir, that is what leader speak is, sir. How do you the path you have undergone over a period of time, whatever you have learned, whatever, that is how people grow, sir. That is wonderful. Scripted speech many times is not required in leaders.
Okay.
And leaders lead by example, not by.
Okay, thank you. Thank you.
It has been great pleasure listening to Sri Pallavmohapatra, CEO of and MD of ARCIL. He was also earlier MD and CEO of Central Bank of India, in which I worked as internal ombudsman for a little more than 2 years. I heard a lot about you, sir. So it has been great pleasure listening to you in person. Earlier, I did not have the opportunity of interacting with you. We also know that you have got 4 decades of banking wisdom. You have been heading SAM and SBA Global Factor, SBA Cards, and you are also having the experience of working in United Nations. So he started with the guidance that he does not have any mantra. He only told that unlearn, leave baggage, and learn new things is what he started with it, which is a great advice, I feel. Then he gave a historical perspective, particularly from 2008 onwards, how banking has undergone changes, particularly after the collapse of Lehman Brothers. He at that time was in Los Angeles, California. He saw the bubble himself. He has told in subprime crisis how it has evolved. At that time, CD ratio was around about 130% is what he was telling. And in India also, he was giving that before AQR, how holding companies were forming SPFs and double finance virtual is happening in infrastructure cases. He also, while telling Paul that he cautioned that stress is building up in retail and MSME, he advised caution for everyone. And he also found that credit card use are also causing a concern is what he told. Though now NPS are very low, he felt that it is a cycle, the cycles can repeat. So his again advice was we tend to learn lessons in difficult times, but forget in good times. So in NBFC also, he found stress is building up. We should be always ahead of curve and we should visualize what is going to come. He has told so many other things also, which was really a great learning experience for all of us. I thank Sri Pallavmohapatra for taking out his time from his busy schedule and addressing the AMP participant. This I am sure would motivate all the participants to perform their duties in a more effective manner, and I'm sure they have got more insights on the subjects that he has spent. I also would like to thank our CEO, Sir Biswa, Ketan, who is a source of strength for us and the guiding force. He felt that AMP program is meant to create pipeline of leaders. Listening to leaders like Mr. Mohapatra will build up change leaders who will work to transform their respective organizations. We also congratulate Das sir for becoming on the planning board of the IGNO also. Then I also would like to thank many directors of IIBF who have joined this program apart from other top functionaries, including faculty and other staff listening to see our guest speaker. I also thank PDC heads and other staff for joining this, taking out time from their busy schedules. Participants of AMP, I'm sure, are benefited by listening to Sir, who has got a great experience. He has handled so many assignments. He himself has told that he has not prepared anything from experience. He was talking with experience. He can keep us spellbound. If he had come prepared, I do not know what would have happened, is what I would have tell. I'm sure that the participants have benefited by listening to him. And I also find a lot of intensive interaction. There were also many questions which for a pause of time probably we could not take it. I also would like to thank Dr. Tiruma and Ravita, Wadhwa, the coordinators of the program, for taking forward the program in a clock-like precision. I also thank all others for the logistical support, and I thank for giving an opportunity to propose vote of thanks. Thank you very much. All the best.
Thank you. Thank you.